So I was reading the JPMorgan news about the app where you get 100 free trades, and they'll do like an asset allocation. And I think that's actually a really smart idea because they have 47 million app users, I think was the number in one of the articles. And so if you think about how many people there are in the United States that are doing some kind of banking for themselves, that sounds like it could be 1 out of 3, or 1 out of 4 people who are doing any kind of online banking or doing it with Chase. So, like, why wouldn't they do more brokerage for those customers and do it in a way where it's being subsidized by other services that the bank offers? And then I was thinking about Robinhood, which has been a runaway success. They've managed to amass 4 million people using the site or using the app. But like, there's this danger for fintech startups where they're like too good at what they do, and so it's only a matter of time before the incumbents come out and say, "Okay, big deal. You raised $50 million in venture money to build this. We have $50 million falling out of our left pocket, so we'll just build a better version. Oh, and by the way, we already have the users, so the advertising budget is whatever. We'll just convert existing users to that service." So the robo-advice thing comes to mind with Vanguard and Schwab, and now, of course, everyone else. So probably all of the online brokers will be doing some version of free trades, whether it's a limit or it's like, a select group of customers like JPMorgan's private client group, which is 100,000 or more on deposit at the bank. They'll be able to do, probably unlimited free trades. So trading to me has been a commodity for a long time. My clients at TD Ameritrade Institutional, in one of the models we run, they're able to trade commission-free ETFs, and not just 5 or 10 ETFs, but like over 100, and many of the most popular ETFs. And then you've had Robinhood for a few years, and you think about some of the free trading online brokerage sites from the 2000s decade. But just because you're giving something away for free doesn't mean you automatically get 100% share. There are a lot of other considerations that people make. So I don't think the Schwabs, the TD Ameritrades are in like big trouble. But yeah, they'll have to figure, Fidelity, they'll have to figure out their own version of what a free trading platform looks like and who should get it and how to market it without disrupting or cannibalizing their existing trading revenue. But overall, I think it's a good idea by JP Morgan, and I think you'll see everyone else play Me Too. And in the spirit of Amazon, the name of the game in every industry is, all right, maybe the thing we used to charge for, we can charge very little or nothing for, but find something else to sell the users when they come in for it. And by the way, the better business is to have 10 times the amount of users paying less that we can continue to market to, rather than having a smaller amount of users that maybe are very profitable. So if everyone's thinking that way, and if low interest rates and free money and venture money has driven that ethos right now, as people figure out business models, it is what it is, and you have to play ball. And so people are finding a way to play ball, and I think this is one more example. All right, that's it. I'll talk to you guys soon.